Oh, is it recording? Yeah. Very good. So, today we got a very long lecture. Okay, we're going to take 1 or 2 breaks. Introduction to managerial accounting. I will repeat very quickly what we did last time and then continue. Today we try to cover everything, and if you have time, a few examples. So we're going to go through the basics, then the fundamental managerial concepts, something about you guys separate. Just move somewhere else. Managerial financial statements, and finally a little bit about managerial accounting today. Alright, last time I told you, it is a field of accounting that provides economic and financial information. 16 minutes left. Right. Look, there are 3 chairs over here. Yeah, you don't need this. There are 3 chairs. Wow, that was amazing. Yeah. All right. 18 minutes. That's okay, right? 18 minutes. All right, so managerial accounting is about information to make business decisions. One of the main ideas is to account for manufacturing and non-manufacturing costs. This is what we're going to do today. Computing cost of a product or cost of a service, and to determine and explain the behavior of different costs. Number 4, to assist management in profit planning. You want to have profit planning, and you want to be able to budget. Means you plan your revenues, you plan your expenses. You want to control your costs. Same as you. If you spend too much, at the end of the month you run out of money. If you're a business, you can't run out of money. And the whole idea is data for making decisions. It's all about making good, proper business decisions. We did last time compare a little bit financial with managerial accounting. Managerial accounting is mostly for internal users. These will be mostly managers and officers. Next, managerial accounting provides internal reports. The reports will be used inside the business, not outside of the business. The reports are made as frequently as needed. If you need them every day, you do them every day. If you need them every week, you do them every week. The purpose of the report is usually very specific. They're all special purpose reports, not general. The contents of the report is sometimes very detailed. You can see every single sale with every single customer. It is specific to subunits. It may be specific only to marketing. It may be specific only to sales. It may be specific only to IT. So it will be to particular subunits. If it's in sales, it may be to particular sales products, and so on. And the most important idea, the most important criterion is the information in the report good, or we call it relevant to make decisions? Does it provide good information to help us make good business decisions? When you run a business, you have to make decisions. If you make good decisions, you're going to have a good business. And if you make bad decisions, it's going to be a bad business, okay? So, how you make your decisions will be determined to a large extent by having good data, okay? And finally, there is no verification. No one independently reviews these reports. They're just used internally. We discussed last time the three primary functions of management were planning, directing, and controlling. With planning, you maximize your short. You want to plan to maximize your short-term profits, okay? Maybe you protect the environment, social programs, but the primary goal of every business is maximum profit. We also call it profit maximization. Okay, directing is about people, is about employees, is about what they call human resources, okay? So how you're going to manage your people. That's what it's all about. It's about providing them incentives. What kind of stimulus you're going to give them to be working okay. Example of an incentive for you will be everyone who comes late for class will have a big penalty, right? Big penalty. Maybe take a point, take a point, take a point. You're late for class 10 times, your grade goes down 1 grade, okay? So instead of C, you get D. Instead of A, you get B, okay? So there gotta be some penalties, okay? There may be incentive for homework. You do your homework, you get extra bonus point. But you don't have homework, you get a penalty point, okay? All right? You will, okay? Really? So, you need to select good managers. If the company is big, you need to have good managers. You need to have good supervisors, good managers, good executives. You need to be able to hire and train employees. This assumes a company of 10 people, 20 people, or they're even talking about companies of hundreds or thousands of people. Anyway, if you're running business and you're not the only person in your business, okay, you'll have employees, you need to manage them. It's part of management. And control is about determining, first of all, what your plan was, second of all, what you actually did, and you try to compare. Oh, my goal today was to make, let's say, 20,000 baht revenue. And you say, but I made only 15. And you ask, well, why? What went wrong? Didn't I have enough customers, or didn't I have enough product, or was I working too little? Whatever the problems, you need to identify what the problem is for getting lower revenue, and then making a correction or making a corrective action. So you need to fix the problem. That's what control is about. This is a basic organizational structure of a big business, of a corporation. At the very top will be the stockholders. They will be choosing the board of directors. And the board of directors will be choosing executives or the chief executive officer. And usually the board of directors and sometimes the chief executive officers will be choosing the different vice presidents. These are by functions. This is law, this is marketing, this is finance, operation, human resources. And then within finance, you're going to have a treasurer, the person who manages the cash and the money. And controller is the person who manages accounting, the chief accountant in the company. We're going to skip business ethics. Business ethics is about managers and businesses lying and cheating. They like to lie, they like to cheat, rather than do the hard work. It's easier just to say, oh, we're very good. And they usually have accounting profits, all the other things. We're not going to do this in this course, any of this stuff. Now we're getting to the real heart of the course, the basics of the course. And the basics of this course are related to costs. Most of what we're going to be doing for the rest of the course is about costs. And most of managerial accounting, as I explained last time, is cost accounting. And at the center of cost accounting are manufacturing costs, okay? And we first say, what is manufacturing? So you understand, it's very simple, very easy. These are activities and processes. In other words, things you do to convert raw materials into finished goods. You can even think of manufacturing taking the coffee powder with the machine, with the water, with the sugar, and making a coffee, a latte, okay, which you drink, okay? So that's a little simple manufacturing process, converting water, milk, and powder and coffee, taking a cup, maybe a straw, right, and making out of it a coffee. So, managerial accounting will be an example where you want to determine the cost of the coffee. Now, all of these manufacturing costs, we divide them all into three groups. There is direct materials, there is direct labor, and there is manufacturing overhead. So these are the three ones. So anytime you have any kind of cost, you always have to answer, is it direct material, is it direct labor, or is it manufacturing overhead? For your homework assignment for next week, you have many exercises, 3, 4, 5 exercises where they just give you the cost, and you just have to determine, say, oh, it's direct material, oh, it's direct manufacturing, direct labor, or manufacturing overhead, okay? So let's look at these in more detail. So, direct material can be physically and directly associated with the product. Somehow you can see in the product. So for this marker, you can actually see the plastic cup, okay? You can actually see it. Somehow it's part of the product. So for the shirt, you know, this is part of the product, okay? For the belt, here, this is part of the product. For the book, the paper is part of the product, okay? You can directly associate, okay? So, somehow you see it's physically and directly associated with the physical product. For the coffee, you can associate with the coffee powder. You can associate with the coffee the sugar, 1 spoon of sugar or 2 spoons of sugar. It's for the coffee, it's very easy to associate with the coffee the plastic cup. Okay, you see it. For this bottle of water, you can associate the bottle with the water. The bottle always works with the water. Okay? And if you got water, you always have a cup. Okay? So the cup will be a direct material. The water is a direct material. The bottle is a direct material. And the label is also direct material. Okay? Because you can directly associate it with water. And then you have indirect material. And the indirect material does not become part of the finished product. Maybe there's a little bit of electricity that you need to use, okay? Maybe there are a few other things, okay, that you need to do. Maybe you needed to use some carton boxes, a few other things, but it's not exactly part of the finished product. So, does not become part of the finished product. That's the first important piece, okay? You cannot trace that material directly to the product itself. You can't really say, oh yeah, we use this material in this product, or we use that material in that product, okay? With the coffee you can do 1 spoon of coffee, you can associate with this. You can use the next spoon of coffee, you associate with that, okay? And usually indirect material are part of manufacturing overhead. So let me go back. So if it's direct material, it's here. If it's indirect material, it's over here. Okay? If it's direct labor, it's here. If it's indirect labor, we'll see soon. So direct material goes here. Indirect is part of overhead. Okay. Labor. Direct labor is work of factory employees, people that work, okay? It can be physically and directly associated with converting the raw material into finished good. So, when you go to a coffee shop, Starbucks, you have an employee, they spend, let's say, 3 minutes to make your coffee, okay? So, this is direct labor, okay? And it is associated with making your coffee. Then, you have one cashier, right? When you buy the coffee, he takes about 1 minute to issue a receipt. They say, what would you like? You like this. So he's got to accept your order. Then he says he has to calculate the price. Okay? It says 60 baht. Then you have to pay. After you pay, he has to count the money, he has to put them in the register, and give you a receipt. Okay? So this may take 1 minute. Well, this 1 minute is direct labor, and it is direct labor of the service. So, when you go to a coffee shop, you got a little bit of a production, the production of the coffee you drink, and a little bit of a service, okay? So, that's direct labor, directly associated with converting raw materials into finished goods. We're talking here about specifically manufacturing costs, but they also apply to services, okay? Right now, my cost is a direct cost, okay? In this particular case, it's the cost of a service, the cost of serving or educating about 25 people, okay? Spending, I don't know, 50 minutes per hour, okay? That's direct labor. Now, indirect labor, it's factory employees, but there's no physical association with the finished product. Example where there is no association will be the secretary of the program, okay? She spends some time she gave me the list of students in the class, okay? And she's doing a number of other things, but she is not directly associated with the main service. And the main service is education. The main service is teaching, okay? So she is a support. The support we call overhead. Overhead in English means extra cost. Maybe someone can open dictionary, and when you open dictionary, translate what's overhead. Yeah. So, indirect labor has no physical association with the final product, and it is impractical to trace to the goods. So, you cannot really trace the work of the secretary to your class group, or to the afternoon class group, or to some other group. Maybe your second year, to associate it with first year students, with third year students, is way too much, okay? Same thing, you run a coffee shop, and in coffee shop you have electricity. You cannot associate electricity with the coffee. Why? Because there's also electricity with the lights. Okay? Coffee shops gotta have a light. Okay? Electricity with air conditioning. How you divide electricity between electricity for air conditioning and electricity for lights and electricity for coffee, okay, and electricity for Wi-Fi. You see, very, very difficult to separate out electricity for the final product or for the service. Same thing here. How do we determine electricity? How much electricity we use for real education as opposed to just cooling or as opposed to the projector, you see? So, electricity will be, in most cases, will be overhead. So what's overhead? Well, can you translate? Translate. That's what I've been explaining for the last 2 minutes. So overhead is like an expense which is not directly associated with the product or service. But what's the translation?
เพราะว่าค่าใช้จ่ายคือเป็นพวกค่าเช่าค่าน้ำค่าไฟที่คือไม่ใช่เกินพวกค่าเช่าค่าน้ำค่าไฟค่าอาหารค่าอะไรทั้งหลาย
You understand what that? Okay. All right. So now miscellaneous cost. Well, let's see exactly. Miscellaneous cost, correct. So let's see what they say here. Costs that are indirect. So the trick is it direct or is it indirect? Indirectly associated with the product. And when you say miscellaneous, it means the following. It means all manufacturing costs except for the direct. So miscellaneous means everything which is not direct material or not direct labor. Pretty much everything else. Okay? That's overhead. Okay? Okay. So they got here a little thing, maybe you will read it at home, I'm not going to be explaining to you how many labor hours to build a car at different car manufacturers, or how many labor hours to build a motorcycle, whatnot, okay. Today they use more and more and more machines and more robots and not real people. So a lot of times today, it's more difficult to determine direct labor when things are very, very automated. Sometimes labor is not as important as software, as computer programs, as robots, okay? Now you're getting a lot of your own education from the internet and from YouTube as opposed to from a real teacher in a classroom, right? Especially for me, for the last 15 years, I've been educating myself mostly from books, which I purchase from the bookstore, books which I download from the internet, or just the internet itself. Okay, well, simple question for the guys on the back, right? That's a question for you guys. Which of the following is not an element of overhead? Which one is not? A, sales manager's salary. B, plant manager salary. C, factory repairman's wages. And product inspector's salary, which is not part of overhead. In other words, almost everything is overhead. Which one is not overhead? Product inspector's salary, maybe. Yeah. Which one is it? Direct. Well, it looks like direct one will be maybe the factory repairman. Okay. So he's actually fixing. All right. So, which one is your guess? All right. No need to guess, right? Just push the button, right? This, huh? You don't need to guess, right? You just say push the button, right? Push button. Oh, sales manager, okay? Sales manager's salary, okay? So, again, it's very tricky. If the sales person, you can associate him with a particular product or with a particular car, you can say that salesperson's work is part of that particular car, okay? But usually, sales, we think as overhead, okay? That in general, the sales function is an overhead function. Again, we're going to be studying a lot more. We're going to be spending many weeks on that, okay? And usually, marketing function is an overhead function. So, usually, this is general overhead. Just general business expense. All right. So we discussed the one piece of classification. Now I have a completely different piece of classification for all purposes. We have, and that's where the salesperson comes in a minute, completely different classification between product costs and period costs. Okay, so we have product cost and have period cost. Let's see what the product costs are, and in the next one, let's see what the period costs are. So, product costs are direct material, direct labor, you associate them directly with the product, and manufacturing overhead. So the manufacturing overhead is somehow associated still with the product. So we say product cost will be direct labor, direct materials, and the manufacturing overhead. Okay? They are necessary part of the product. So somehow you need them to get the product. Okay? They are recorded as inventory. So all of these expenses, when the product is ready and finished, it becomes inventory. Okay? It becomes a rollout element. It becomes a marker. It becomes a shirt. The shirt will include the button. Okay? So every shirt's got maybe 5 buttons. Okay? And it is not an expense until the goods are finished. Until the goods are sold. Okay? So it's an inventory. It's part of inventory. You guys study in your first course inventory? No? You don't study inventory? You don't study sales and inventory? You study inventory before? No. Okay. You studied? Maybe you studied but you don't remember? Okay, so again, it's direct labor, direct material, manufacturing overhead. It's part of the product, okay? It becomes inventory and you convert it to expense after you sell it, okay? So these are the product costs. So, back to the overhead. It's a little trickier because now you got period costs. Let's see what the period costs are. When you have a period costs are non-manufacturing costs. So, the sales of the executive, it's not manufacturing cost, it's a period cost. Okay, the salary of the executive. The lawyer, you got a lawyer, the university has a lawyer, okay, every business will have a lawyer. The lawyer is not a non-manufacturing cost, so the lawyer will be a period cost. Okay? What else? Accountant doesn't produce anything. The labor of the accountant is not associated with any particular product, okay? The accounting office downstairs, okay, is not associated with your class or other class or any other class. They're not even associated with you. They're mostly associated with us, okay? So, accountants are usually mostly non-manufacturing costs. So, all of these costs, I already gave you the example of marketing. Marketing and advertising is also non-manufacturing costs. Sales, a lot of the sales is all of the sales is non-manufacturing costs, okay? So, all of these would be examples not with manufacturing costs. If it's a non-manufacturing cost, it is called a period cost. And if it's a period cost, you match it with a revenue, and then you subtract it from the revenue in the period. So, if you have a revenue in November salary for the accountant, you subtract it from the November revenue. Okay, so it becomes a direct expense. It's not a cost, it's a direct expense, okay? So, you match it up against revenue for the period. The product becomes expense only when the customer purchases it, okay? The lawyer, the accountant, the executive becomes an expense at the end of the month when they get their salary, okay? So, let's see what else. And here's another general stuff. These period costs include selling expenses and include administrative expenses. So, in general, selling and administrative expenses are not part of manufacturing costs. They're considered non-manufacturing, and they're considered period costs, okay? So, now you see, everything is either a period cost or a product cost. And if it's a period cost, it becomes expense. If it's a product cost, it becomes direct labor, direct material, and manufacturing overhead. I will think that there will be a nice little picture in the book and maybe a nice little slide coming up where they explained it over here. It's here 19.3. Okay, well, don't worry, probably there will be a picture over here. There it is. That's 19.3 is this one over here, okay? So, now you see how we classify all costs. All costs are either product costs or period costs. In other words, everything is divided. Product costs we also call manufacturing cost. It's the same thing. And period costs are non-manufacturing things. So everything is divided into manufacturing costs and non-manufacturing costs. And the manufacturing costs are three. They're direct material, direct labor, and the manufacturing overhead. So the most difficult part is to distinguish between the manufacturing overhead and the non-manufacturing cost. Here, you still have some indirect materials, okay? You cannot associate it with a product, with a specific product, but it's part of manufacturing. You have some indirect labor, okay? For example, the floor supervisor. He's part of the manufacturing, but you can't say, oh, he produced this bottle or he produced that thing, okay? So his labor is not specific to a product, but it's part of the manufacturing process, okay? And you will have some other indirect costs, maybe pieces of paper, maybe some software that you use. You may have other things which are part of the manufacturing or the production process, okay? And here, the two main ones are selling expenses and administrative. And part of administrative will be, again, lawyers, accountants. Well, the lawyers and accountants themselves will use offices, will use rent, okay, rent. So, if you're renting space, the question is, what, you cannot just say rental is a manufacturing or non-manufacturing. If you rent it for sales, it's a non-manufacturing cost. If you rent it for the administration, it's an administrative cost. But if you rent it to actually manufacture, then it becomes a product cost. And if it's a product cost, will be part here. The rent is not a direct material, it's not a direct labor, so it's going to be overhead, okay? So you need to begin to think like that, okay? And you're going to get many exercises. Hopefully we're going to finish in 2 hours this part, and in the third hour we'll get some examples, okay, to show you. But it's very simple, very easy. All right, let's see what's next. Next is the next section of an income statement. Okay, so that's section number 3. Section number 3 is manufacturing costs in financial statements. And the question is, how does it work? Well, we compare, well, 3 in general, 3 types of businesses in accounting. In accounting, you should have studied a simple service company. Okay, simple service company like a movie theater. Okay, or the next level is called merchandising. Merchandising is when somebody buys something and then sells it. Example will be businesses that sell telephones. They don't manufacture telephones, okay? They buy the phone, and when you come, they sell it to you. They sell you it. Okay? So, they buy it, and then they sell it. It becomes the business of reselling stuff. It's very, very common. When you go here in the market, well, I don't know where this is over there, this side, the market, right? All the people are doing is merchandising. They buy the goods, they bring it to the market, and then try to sell it for profit. Okay? And manufacturing. So we have services, merchandising, manufacturing. Okay? Services don't have any particular product. No particular good to sell. The best example of a service is massage. It takes only labor, okay? It's a pure service, okay? Another type of service is a movie theater, okay? There's nothing specific. Another type of a service is, the telephone service, not the telephone machine, okay? The service, AIS, okay? We use AIS, it's a service, that's how I call it. They call it phone service, okay? You go somewhere or anywhere, Wi-Fi is a service, okay? So, if you are a merchandiser, you have inventory and you're going to have cost of goods purchased. This is all the shirts or all the watches or all the pens, whatever you're buying during the month. Okay? If you are a manufacturer, you have costs of goods manufactured. How much it costs you to make the pen. So the manufacturer makes the pen. He uses plastic, he uses inks, he uses other things. The merchandiser just buys it and then sells it, okay? So the merchandiser is easier and the manufacturer is more complicated. That's why in your first course, you always study first services, which are easiest, and then you study merchandising. And in the second part now, we study manufacturing, which is a lot harder, okay? So here we say cost of goods purchased. Now in manufacturing, we say cost of goods manufactured. You know, for your exam and for your quiz, you need to calculate the cost of goods manufactured. And in the end, when you sell them, you say cost of goods sold. So how do you calculate the cost of goods sold? In exactly the same way. Here you say, oh, I'm starting inventory, let's say 1,000. I buy 5,000, so my total is 6. I end with 2,000, so I got 4. Okay? We're going to get many examples of this coming down the road. But you always remember is that beginning inventory plus what you purchase or what you manufacture becomes ending inventory and cost of goods sold. This is a general formula for all of accounting. Okay? It works the same with your money. At the beginning of the month, you have 5,000 baht, okay? Let's say you have 5,000, that's at the beginning of the month, okay? So it says cost of goods purchased. Now in your case is you make extra 10,000. You make extra 10,000, okay? So for the month, you have a total available for the month of 15, okay? At the end of the month, you have 3, okay? So, you started with 5, you added extra 10, you had a total of 15. But at the end of the month, when you count your money, well, suppose today is the end of the month, you got only 3. So, how much you spend during the month? 12. Well, that's the way it is. It's exactly the same here. You start beginning inventory, you start with 5, you buy extra 10, so for the whole month you get 15. You end up with 3 at the end of the month. So the cost of goods sold is 12. Exactly the same calculation. This is the most universal calculation in accounting. You start with how much you extra get during the month. It gives you the total for the month. And then you say, well, how much I have at the end of the month? Because you can count them, okay? You can just see in your wallet how much you have in your bank account. You can count the ending inventory. So usually that's what businesses do. At the end of the month, they count how much they have, how much goods they have. I mean, like you count every month or every day how much money you have. Maybe you count it every week, right? How often do you count your money? Yeah, but the question is how often you count it? Every week? Or you don't count your money, just spend it? Just spend it, okay. So, that's about manufacturing. In manufacturing, the important part is the cost of goods manufactured. And they just provide you a simple example of, this is going to be income statement. You already studied income statement? In an income statement, you have revenues, you have expenses, and you have net income. So, part of the income statement is cost of goods sold, okay? And this is how it works. Remember, it's the same thing as the previous chart. You say, my inventory at the beginning of the month, which is the money that you had at the beginning of the month, my inventory at the beginning of the month is 70,000. You extra purchased 6,050. So the total for the month that you had, we call cost of goods available, is 720. 720 is 70 plus 650, 720. Okay? And then you count what you have at the end of the month. At the end of the month, you have inventory of 400,000. So you start with 70, you add 650, you got a total of 720. At the end of the month, you have 400. So the difference between 720 and 400 is 320. So a different way to calculate is like this. You take the first two, 70 and 650, 720, and then you take 320 and 400 is 720. Okay? So that's the calculation. Again, you'll need it for all the others. All of them you're going to do like that. For manufacturing, it's the same. Now, it's called finished goods inventory. 90,000. That's what you begin, okay? This is beginning, again. This is the beginning. Cost of good manufactured, okay? Cost of good manufactured. You manufacture for 370. So, available for sale is 460. And this is the finished goods inventory, is 80, okay? So, cost of goods sold, 380, okay? So, that's the calculation, okay? This is a simple, easy, straightforward calculation. Okay, let's see what else we got. It gets more confusing, but you guys, that's the the most difficult part of the course is what we do today. Okay? So you'll have to do your homework. So you got the beginning inventory, okay? From the beginning inventory, oh, we got so many things. Again, it's the same concept. You add the total manufacturing costs. So, oh, we got a total manufacturing cost. And we call this total work in process. Total work in process. Then you take the total work in process, you subtract the ending inventory. You subtract the ending inventory and you get cost of goods manufactured. So you get the cost of goods manufactured by getting the work in process. Okay? So now we need to say, what is work in process? Work in process is partially completed product. So, product which is not complete. For example, you are making cars, okay? And the car is maybe half complete or 1/3 complete or 1/4 complete, okay? So, on December 31, not all cars are finished. Not everything is finished, okay? So you have a direct material, then you have a finished car, but in between you have work in process. So partially completed. A different way of saying this, you can say partially incomplete, okay? So it's not fully complete, okay? It's only part complete. So that we call work in process. So, in every manufacturing process, you usually will have some work in process, something that you're currently working on at the end of the month, but it's not yet complete, okay? Examples will be you as a service. This course is work in process. We already have 2 weeks of this course. It's going to be completed when we finish 16 weeks, okay? So right now it's a work in process. The course is partially complete or incomplete, okay? And then you have total manufacturing costs. And we already covered them before. It just repeats. It includes direct material, direct labor, and all overhead. So, and these are incurred in the current period. Fun, right? I know it's confusing. That's why, so that you don't, it is confusing. And there's only one way. You have to solve many problems. In other words, so that you're not confused, I'll give you about 20 problems to solve. It's going to take you about 6-8 hours. Where after you do for 6 or 8 hours, you will not be confused. Now, if you're confused, you're likely going to fail. Okay? You understand? Or if you're confused at work, you're going to get fired. No one's going to hire, no one's going to keep you on the job if you're confused. Okay? You're confused, they say, go back to school. Pay again and learn. Okay? Right? Yes, it is confusing, but you will see some examples. It has to solve many problems. There's no other way. When I studied first time 20 years ago, very confused. Okay? So, this is how you do cost of goods manufactured. So, a main piece of manufacturing cost is the cost of goods manufactured. Then, we'll be calculating later the cost of one product, how much one bottle of water costs, okay? So, they sell it for 7 baht, and it costs them only 1 cent, right? Okay, but they do have cost of refrigerator to keep it cool, okay? Right? But it's a selling expense, okay? All right, so that's the formula. What's the beginning working process, okay? What's the total manufacturing cost? And that gives you the total cost of working process. You subtract the ending, so you got the beginning, you got the ending, and you got the cost manufacturing. And the manufacturing costs, again, it's very confusing, but you'll have to look through them. That's why we're going to spend 2 weeks on this, maybe even 3, okay? So, you see, first you put in the direct materials. So, you have cost of goods manufactured. Cost of goods manufactured includes manufacturing costs. And manufacturing costs are 3. Direct material, direct labor, and manufacturing overhead. Let's see what's the direct material. Direct material will be raw material inventory at the beginning, plus raw material purchased, and then you take raw material at the end, okay? Less raw materials, okay? So, this gives you direct materials used is 146. That's what you use, okay? Direct labor is, hey, we paid salaries to workers for direct labor, so much, okay? So, this is direct, let me see, I want to make sure that I get the right one. So, this direct materials used will be here, right? And then you have manufacturing overhead. And manufacturing overhead will use indirect labor, factory repairs. Pay attention which are the indirect, okay? So the indirect will be indirect labor. You'll have factory repairs. You're also going to have factory utilities like water, electricity, air conditioning, lights. All of these are different types of utilities. Maybe the factory phones, okay? Maybe the factory camera, the factory security system, okay? Factory insurance, also factory rent if you have rent, okay? So, see how you get the direct material, direct labor, direct manufacturing, and then from these 3 costs, direct, and manufacturing, you get total manufacturing cost, 376, okay? That's the total manufacturing cost. So, where does the 376 come from? The 376 comes from, and someone with a calculator may verify, comes from these 3 here. 146 will be direct materials. Direct materials, 146. Next one is direct labor, 175. And then total manufacturing overhead, 54. So, just to make sure everybody understands, this 146 is the sum of these 4, okay? These here give you 146. This 146 is 169 minus 22. 169 minus 22 becomes 146. So, the total raw materials available for use minus the raw materials on December 31, okay, is 22, okay? So, This minus this gives you this 146, okay? This 169 is 16 plus 152. When you add 16 and 152, gives you 169, okay? So, you get the materials, and you get the direct materials used over here. Then, the direct labor is easy. And then more complicated is the manufacturing overhead. You have 1, 2, 3, 4, 5. You have 5 manufacturing overheads. You have 14 and 12 is 22, and then 32, and then 42, and then it's about 50 something, okay? 52, and you got a few here, it's 54, okay? So, this one here, and this one here will give it the 376 number. So, now you see what else we got. We got work in process on January 1. In January 1, you have a work in process of 18,000. That's what you have at the very beginning. And then you also have total manufacturing cost. Your total manufacturing cost is 376. So total of 18 and 376 for the whole month is 395. Okay? And then the question is how much you finished with December 31. You finished with 25. And you got 370. And 370 is the cost of goods manufactured. So, you see now I got 6 or 7 steps, okay? The first step is get the raw materials, the direct materials, So, you got here one calculation for the direct materials. That's the step number 1. Direct labor is easy, manufacturing part is easy. So, after you got the direct materials, step number 2 is you get the total manufacturing cost. And after the total manufacturing cost, you use the work in process in January 1, you work the work in process here, and you get the final cost of goods manufactured. Okay? So, you got like a 3-step process. Number 1, get the direct materials. Number 2, get the manufacturing cost. And number 3, get the cost of goods manufactured. Now, if you know, we produced 370 units. If you produce 370 units for a cost of 370,000, 1 unit cost 1,000. So, once you have the cost of goods manufactured, you need to calculate how many units you did later on. Okay? So, they give you some stuff over here, the same thing here. Okay? This Olsen company, okay, do they have the same numbers? Yes. So, they give you as a slide, they give you this little table over here, how it works. Is it time to sleep? Yeah. Time for a coffee?
Yeah.
Okay, coffee time. Cameron.
Không quen hả?